Money is a store of value, medium of exchange, and should be saleable. All important points. Now, in your books, you talk about the most successful forms of money: scarce, durable, divisible, portable, fungible, recognizable. So what I'd like you to please tell us the key differences in how you define sound money, hard money. I know you talk about gold. So please give us a sliding scale of hardest to, I guess fiat is the other end over there.
Yeah, so the concept of hard money refers to the difficulty of producing more of the money. So the most common place you would hear this term, it would be in a country that has a terrible currency, and where people would refer to their local terrible currency, say the Venezuelan bolivar or the Lebanese lira or the Turkish lira, or, we could go on and on and on. There's so many of these terrible currencies around the world. Well, there's the local, the Argentinian currency, and then there's the dollar, the hard currency. And the two are very different. So a lot of people in these places, I'd say, the highly paid people, the people who have who are highly skilled in their jobs and can demand to get paid in their choice, they generally choose to get paid in the hard currency. And the reason for that, and everybody understands in that context, they understand the difference. The local central bank is printing an enormous amount of the local currency, so that's easy money. That's the easy currency. Every year they make 20, 30, 40, 50% more because they just keep printing. And then the hard currency is something that nobody around you can print. The US dollar is being printed around maybe 7% per year. So when you compare 30% to 7%, obviously the US dollar is doing much better. It's a lot harder. So a lot of people dump their local money for the harder currency. But what Bitcoin is doing is that it's bringing that dynamic back. But what it is doing is that it makes the dollar look like the Argentinian peso, basically. That's really the key thing, because Bitcoin's supply only grows at currently around 1.7% per year, which is the lowest that we've had for a money ever. So in my book, The Bitcoin Standard, I argue that the reason that gold became money historically is because it has the lowest supply growth rate. And we have data on gold that goes back quite a while. And you see that gold increases at around 1.5% to 2% per year, always. So every year we get a little bit better at making more gold. So we find more gold every year, but we keep adding the new gold produced keeps added to the stockpiles of the existing gold. And so the existing gold keeps getting bigger. And so even though annual production is higher, the stockpile to which we're adding to is also a little bit higher. And so the annual growth rate continues to be roughly at the same level of around 1.5% to 2% per year. And so that was what made gold money, because it has the lowest supply growth rate of everything. Gold is the hardest money ever. And you see that dynamic, as I was saying earlier, within government currency. So even after you remove gold as money and governments replace it with their own currency, the same dynamic perpetuates throughout the 20th century across the world, where we see the easier money getting destroyed in favor of the harder monies. And now Bitcoin is back, offering us a new form of gold, effectively, that is even better than gold, because the supply growth rate drops by half every 4 years. So currently it's at around 1.7%. So it's very close in the range of what gold experiences. But starting next year, it's going to drop by half again. So it's going to drop to around 0.8 to 0.9%. At which point, it's going to be significantly lower in terms of its supply growth rate than gold. And so at that point, it's going to be the hardest money that humanity has ever had, which, for me is kind of a big deal. So I think this is enormously significant, because as I was saying, whatever is the hardest to make is what ends up being used as money. This is almost like a golden rule that you see all throughout history. Whatever is the hardest to make is what gets used as money. And so we're seeing the world adjust to Bitcoin becoming money, because we can use Bitcoin. And where it differs from gold is that you cannot have gold-based monetary system without the acceptance and permission of national governments. They need to sign off on it because that physical gold has to be centralized in order for it to clear internationally. Whereas Bitcoin can perform all of its international clearance without having to go through centralized government-run agencies. So it can allow us to have a free market in money without government permission. That's really why it's so unique. And that's why it's better than Bitcoin. That's why Bitcoin is better than gold. So first, it has a lower, starting next year, it's going to have a lower supply growth rate. But secondly, and more importantly, it's much faster and cheaper to move around the world. So we can have a free market in the clearance and settlement of gold around the world without having to rely on centralized entities managed and controlled by governments and central banks.